Okay, now technicals. That's what we can see. From 2001, it was around $4. Then it's moved up, and you can see it never goes only up, up, up. It goes up and down, up and down, right? And we can see that for the last 3 years, 4 years, it's moved quite a lot. It's moved from a level of $27 to $190. And we can see that for the last year, it's moved from $190 and it's achieved the level of 90, something like $8. We can see it's still on downtrend. So at the moment, on the monthly chart, we can see it on resistance level, but still indicators, they're showing us that it might go up even higher. It's on the monthly chart. And then on the daily chart, when we met at our club meeting, it was here. So we can see there are a few lines here, and for the last like 3 months, it was moving in this kind of middle line. Okay, and at our last club meeting, just before the earnings, uh, the company was at 110, $11. So we can see that it's kind of was flat for a couple of weeks, and it could go down to $96, but instead of that, it broke through because earnings were good. And we can see now it's moving towards its next resistance level. Okay, it's about 128. As I said, that indexes right now they're high, so we can expect the market pulls down. When we see the market pulls down, we might see that this particular company will pull back down again. And it will give you the opportunity to enter the position. So at the moment, we can see all indicators, MACD, stochastic, and RSI, they're all high. So at the moment, you need to sell the company or you need to sell the calls or buy puts, but not to buy the company. Okay, at the moment, it's pretty high, especially at the moment, it's in a 2000 moving average, just staying right here. Okay, for the next, for the last 3 days. Okay, and here we can see when it achieved 200-day moving average, after that it's moved down. So it might repeat it again. So always pay attention to the history of the same particular company. Okay, that's from technical indicators. Now, what do you think, guys, yourself? Would you buy it right now? Put green tick if you buy or red cross if you don't. Yeah, absolutely right, Michael. You probably wouldn't buy it. Michael is right. So we're not going to buy the company right now because it's high. So it's much better to wait and see what is happening. Now, interesting thing here that at the moment it wasn't down trade, but company is undervalued. We discovered it. If the next move, if we can, because at the moment we cannot see the trend. It's broke this trend. We don't know where it's going to go. Okay, it might continue and start moving in the like top line, so it might go to 128 or maybe turn around right now and go back to $110 and then to continue to move here, right? Or it might break through this level and go back to $96 again. So at the moment, it's really difficult to say what is going to happen. Now, if it's going to continue and going down to, for example, to $105 and turn around, so we will see the uptrend. We will see that the direction has changed. But until that point, it's practically impossible to say what is going to happen because it easily can go back to $96 level. So where it was a previous support line. Okay, please pay attention to what is going to happen with this company within the next few weeks. Okay, that's what I see. The previous last week we discussed it. The level was here. Okay, it could continue to 95, but it instead it's broke and went to the next uh, resistance level. So at the moment it's on that level where the green line is moving average 200. So it stopped here. Okay, it might continue even higher to 130, but it would be pretty strong resistance level. Okay, what kind of possible strategies we can implement? It's all depends on your own trading style. Okay, and you choose how you want to approach this particular company. Now, because this company has a long-term potential, right, and we have much higher uh, potential for profit than risks of going down. If we look at our spread, when we analyze it, we can see that our price range, we can see that we will buy anything between up to $160, right? From 160 up to $200, we're going to hold it. And if it is going higher than that, that would be the area where we consider selling it, this particular company. At the moment, it's 124. So it's definitely in a buying range, okay, of the company. So if you decide to buy it now and to hold it in a and hold it maybe to up to 160 or $211, somewhere there, right? So how much you can make money? So if you hold until those levels, you might get up to 30 to 70% of profit if you just buy it and hold. Okay, you are not going to get any dividends on that, and it might take you 1.5 or 3 years, okay, in general, to wait it. So but that's what you can expect. Now, if you buy and sell using technical analysis, if you are more active on the market, what you can do, you can look at the next wave, you can look at where the next support level is going to be, and then to buy. For example, if it's continued the current trend, it might go to the level of $95, right? So somewhere 95, 100, and then when you see it's changing the direction, you buy it and sell it at 105, $110. So on those rolls, you might make like about $10 profit, right? So about 10% profit. So if you buy it here $99, here sell it 110, so you made $10 profit, and it might take only a couple weeks, okay, maybe a month in order to do that. So and you can use these roles in order to get this type of profitability. That's the second option, okay? Now the third option will be if you buy the company and then sell covered calls. So buy and rent strategy. Now, in this particular case, you might expect about 3 to 5% of profit. We're going to look at option chain right now. And another option is to do sell puts. So instead of buying shares, you might start selling puts first. Okay, you also can get about 3 to 5% profit a month. Then, if you will put shares, so for example, if you sold puts and the share price moved down and below the strike price, these shares will be put to you. So you will have to buy it. But then you can turn around and start selling covered calls, or you can buy and sell this company, or you can hold it for several years. It's already up to you. But the main thing for you is to know your strategy before you start buying or doing anything, because majority of people, they kind of think, oh, I'll do this, then I'll change it and do that. So try to avoid it. Try to do uh, exactly what you plan to do, because if you're planning, for example, to buy and hold it, buy and hold it. Okay, if you're planning that I am buying and holding it, but if it moves down, I start selling covered calls in order to cover my fall, do exactly what you planned. Okay, so that is very, very important to do what you have in your mind. Now, that's the option strategy. I took the screenshot, and you can see what you're going to get if you're using options. Now, again, I want to repeat that at the moment it's quite high, and if you consider entering this position, you might want to wait, okay, because you might get it 20% lower. So if it moves back to $100 level or even $995 level, so you might get it like 30% below the current price, so which is pretty amazing, right? And biotech companies, they're pretty volatile, and and it can go there pretty quickly. Now, but when it moves down, so we can expect about same percentage of profitability using call or put options. So at the moment, the price 124.86, okay, 124.86, so it's practically $125. Now, if we see this $125, that would be at the money. So assuming, like as I said, it's not a good time to buy right now. So, but if we had the shares right now, so how much we can get? So at the moment, the market is closed, so and the gap is pretty big. right? But even if you get 4.6, $4.7 on your $125 investment, it gives you 3.7% of rental profit. Okay, and then if it moves a bit up, you make the difference which you purchased and sold your particular stock. If you're going to go for higher level, so for example, $130, for example, you bought the company and you don't want to sell it, okay, and you want to profit on the move. So, and you're going to take the higher strike price. So, and if you take this level, so you get $2.7 divide by 125, you get 2.1% just rental income, and then if it moves up, you get another $5, which gives you approximately 4% more. So in the best case scenario, if you bought the shares right now and it moves above $130, you might get practically 6% profit. Two of them would be from rental option premium and four from the growth. So you need to take into consideration. If you're conservative, you can go for the lower strike price. Okay, for example, if you choose $115 strike price and you get $11, so basically you buy it at 125 and you got 115 plus 11, so it would be 126. Your profit will be only $1 here. Okay, but you're bringing your risks down to $114. Okay, that's another thing to consider if you're playing safely. So always choose where you want to sell your call options. Now, if you decided to, if you don't have shares and you're going to buy those shares, okay, first, but instead of buying, you're going to use put option, you can sell puts. For example, if you sell put for $115 strike price, you might get $1.60 right now. So $1.60 divided by $1.15, it would be 1.3% profit, right? So, and if you buy the shares, you're going to buy them not at $125 level, which is now, but only at $115 level, minus $1.60. That would be about $113.40. That would be a cost of your shares. Probably if you at the market, you can bargain here, and you might get maybe even more than $1.60. So that's how it works. Okay. Of course, you can use August. It's September. It's 45 days from now. You can use August. Would be lower strike prices, premiums there, but you still can use that one. But again, I want to repeat that it wouldn't be a good time to enter this position right now. So if you wait, you might get much better chance to purchase this particular company if you decided that this company is good for you. So you need to make this decision yourself. Okay.